Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Saturday, August 2nd, 2014, and we're going to take, this is going to be our month-end view. We're going to take a look at the markets in detail and take a look at daily, weekly, and some monthly charts and try to put everything in perspective as to where we're at and what's going on. We'll have a separate trade ideas video. I'll put it out tomorrow like I've done in the past, and just for this weekend right now, I'm going to have this separate video so I can focus on the market and what's going on, because we've had a little bit of activity. Okay, the Dow was down almost 70 points yesterday, and that was on top of the 300 plus points on Thursday. So we've had a little bit of damage in here. I do think when you look at this, this looks like an ending diagonal to me. I know it's slightly different than the ones we've drawn in the past. I do think in an ending diagonal, you have all the waves are zigzag waves. And I think that's what we're getting in here. Some modification of it. 3 didn't go all the way up to where I've got this line drawn, but it was higher than 1, and therefore that's valid. Another zigzag down. And then you get this kind of, you know, questionable ending, like almost like a diagonal within a diagonal kind of thing. It was really kind of weird. And I think that's what threw a lot of people off. And I do think this is what's going on as you look at it. And I do think we've got 5 waves up. So we will see. We'll see how far and what kind of damage is done. Now, we'll look at all the indicators here in a little bit. We are, you know, this market basically went through the 55-day moving average like a warm knife in butter. I mean, really the 55 here, 1 day below, 1 day below, 1 day, 2 days here. Yeah, we are 2 days below, but that first day was pretty hard down. This kind of looks like we're outside the Keltner channel in here, okay? Outside the Keltner channel back in January. And we had this big bar, and then we had this like little pause bar. Okay, this almost looks a little bit like a pause bar. Notice how you get the low and the selling comes back in. That doesn't necessarily mean it's going to stop. I mean, look, you got the low and selling came in, and the close was, you know, above here too, and then had this next day in a big downdraft. So it's kind of hard to judge just based on one bar. We could be in for a pause. I mean, who knows? I mean, we've come a long way pretty quickly. Let's take a look at the indicators real quick. You know, you can see we've been talking about this. Divergence has been building for a while. And it's almost like people, you know, you start to get where you're like, okay, really? You know, you're talking about negative divergence again, bearish divergence again. Well, eventually, you know, all the chickens come home to roost. So, and that seems to be what's going on right now. Let's take a look at the weekly chart. The weekly chart again. This chart is kind of a little bit of the bigger view and the bigger perspective of what's going on. This is one scenario that we're playing out. And we're talking about Elliott wave. We think, you know, the major 5 waves were up here back in 2000, and we've been doing some kind of corrective mode here over the last 14 years. And this whole pattern since 2009, it's a lot of overlapping, okay? It's a lot of overlapping, and that's why I feel pretty comfortable that what we're doing is a complex kind of zigzag, WXY complex type of zigzag moving up here on a B wave. And, you know, I really, you know, I feel pretty good about that assessment. We're getting this breakdown in here on the weekly bar. Let's take a look at that a little bit closer. Now, pretty strong down. The next one is on the monthly, and again, this a little bit clearer on this pattern. You can see we're right at this trend line, and of course, this is month end, so that would have been Thursday, okay, and then Friday would have broken this trend line in here. And look at this reversal bar, outside down, okay. So outside down, I mean that it was the bars had a higher high and a higher low in the previous day. Now the other thing is, remember I talked about in a previous video or post, I can't remember which, that the month of June was the most compressed since like back here somewhere in 2005. Like it might have been this little bar here, the most compressed bar. And I remember thinking, well, okay, that kind of ended this sideways move, and then we broke up. This could be ending our move to the top. And it's just kind of weird. And then we're getting this reversal bar. Now, back here in July of 2007, we got this outside down bar, and you got a little bit of a downdraft in August early on, and then August came right back and closed a little bit higher. And this is the one that where we went to the high in October. Does anything repeat exactly? No. So am I expecting this exact replay? No. So I'm just trying to note the kind of bar we got, and we had a similar type bar for the same month 7 years ago. So we'll just have to watch and see. Back in 2000, we had an outside down bar in January at the top in the Dow. Okay, so that's the Dow. Let's see. I do think, and I'll talk about this, I'm going to mention this in the post, that the similarities to the 70s in the big sideways move in the 70s, I just can't seem to get past it. You know, this is the first move up of a major wave up that concluded in January 1966. And then this huge sideways move that we went on, the similarity is pretty close. Now, this was of an entirely different degree, okay? This was in the 5-wave sequence coming from 1932 up to 2000. Okay, so this was a corrective within that. We are now correcting the entire move from 1932. This was a correction of the third wave from back in like the 40s. Okay, so it wasn't to the degree that we're correcting right now. And you can see what happened in here. And this kind of action, it was pretty severe. I mean, I guarantee you that people that were sitting right here at the end of 1972, they're like thinking, wow, we just broke above 1,000 and here we go, off to the races. And that's not exactly what happened. So you never know. But all you can try to do is look at a pattern, and this is a huge broadening top pattern. Okay. We got this little reversal bar right up in here. So we just need to be really, really careful in here. Let's take a look at the SPX. We are breaking this trend line. We broke the trend line from April. We have broken the trend line from January up on the SPX. The interesting thing too is, I don't know if this is ominous or what, but this close right up here on July 24th, the close, 1987. Well, 1987 wasn't a real good year, and 1987 is a great example of how something can go bad really quickly. The other point I want to talk about, and I may use this for a title of our post, I don't know yet, I haven't written the post yet, and I may just rely on the video today, is when does 6 equal 36? Well, it's really interesting. Here's 6 days down from the top, okay, from this point right here, 6 days down from the top. Those 6 days, ending on Friday, just closed lower than the previous 36 days of trying to go up. Now, I've talked about this before. This is why if you're trading stocks and you're not comfortable trading options yet, you need to start trying to learn options, and hopefully I can help you with that, because using puts to trade to the downside in stocks and, you know, on ETFs and other vehicles too, it enables you to play the market to the downside, and markets move faster to the downside than they do to the upside. Okay, they'll tear it down much, much faster than they can build it up. And this was a perfect example that we are 6 days. In 6 days, we destroyed, you know, what was built up over 36 days. That's just an example. And let's see here. Let's go ahead and take a look at the SPX. The weekly chart continues to show the divergences in here on the weekly chart, which is pretty negative, and it could be indicating a fairly strong breakdown coming. You know, and again, you know, nothing moves in a straight line, and you're going to get rallies, you're going to get zigzags, and that's what we're trying to figure out. And let me make sure I'm trying to talk about the weekly. Yeah, now I want to look at the Nasdaq. So the Nasdaq is not nearly breaking down to the degree that the New York is, the Dow and the SPX. It seems to be bouncing off the 55 in here, coming out of this consolidation, but not very strong here. And let's see, I want to take a look at the weekly chart on the Nasdaq. Bear with me, I've got notes here and I'm trying to reference them as I'm looking through things here. The Nasdaq weekly is showing us divergence just like the other indices. So it's a little bit of a warning sign, and you kind of wonder, was this move a little bit of the shot across the bow saying, hello, time to wake up, everybody. Because it's been kind of a little bit of a lull over the last 6 weeks or so. Russell 2000. Let's see. There we go. Now the Russell 2000, I do think we've completed 5 waves up to, and I think it's the end of C also. We've got this support line in here at the bottoms from the was it the February low and the May low, okay? This looks like a potential double top. I think initially we thought, well, maybe we're going to get a head and shoulders, and this came right up almost exactly to the top here. So now it's a potential double top in here. It's not confirmed until it breaks the low in between the two tops, okay? And if it does, then the minimum move is the distance between the high and the bottom down here, okay? And that minimum move is here. That's not huge. I mean, it takes you back to where it was in the fall, or last year, I guess. Might be better if I do this. Takes you back over here where we were June, July of last year. But it's a pretty good little downdraft if it takes it out. So that's just something to watch for. That was the read I had on that. Let's take a look at the weekly. Here we go. Okay, now the weekly chart, this is really interesting. Again, divergences just like we're getting on all the other indices. Look at this huge trend line from the March 2009 bottom, and this trend line with a couple of touch points on it, and we are right at it, okay? Now again, this is a weekly chart, so let me see. I think we may have, I don't know if we broke it or not, honestly, because I didn't think about that. Because, well, actually, no, I'm sorry. I was confused. I was thinking about the monthly. If that's the weekly, that is the close. Yeah, that's the close yesterday. So that's where we're at. We're right here. So we came down to low right to that trend line. So if we do go down and break this low here on this double top, we will be breaking this trend line that goes all the way back to March of 2009. Okay. All right, let's take a look at some of the indicators and see what they are telling us. The short-term trading index, or trend as some people call it. We're getting some weird readings. For the market selling off, we're getting some low readings in here, and I think what's happening is this is a calculation of advances divided by declines, divided by, in the denominator, advancing volume by declining volume, divided by declining volume. And so what must be happening is that the ratio of advances versus declines is in proportion to the ratio of the volume on the volume side. So we're not getting, one huge lopsided volume type signal in here. So that's why we're not getting the jump up. I mean, we're getting a reading of down in here 0.94. I think on the New York Stock Exchange website it says 1.01, so I'm off a little bit on this with the data, but I think it varies sometimes day to day, because I went back and checked, and on Thursday they had 0.84, I've got 0.86, and so the data vendors, sometimes the data is just a little bit off depending on when somebody took the reading of the advances, declines, and the volume and that type of thing. So not getting a strong signal in here. Let's look at the VIX. VIX, on the other hand, we are up in overbought territory. We've been there before a couple of times. I think the main thing is we're not nearly as high as where we got at the end of January in the sell-off, or back in October even. And what about the August? Or June? Okay, so the June extreme, the October, the end of January. We're not there yet, and we're not showing divergence. We're a little bit of divergence here on the DI plus, but not on the RSI. Okay, so I'm leaning towards, because this has given us signals on the RSI. I like the fact that the RSI has given us signals as when it tops. Now, so that means this could pull back. We could get a little rally or sideways move, and then we get a divergence on another sell-off. We're just going to have to watch. But I guess I am leaning towards right now that I'm not sure that we've seen the bottom of this little sell-off. And the high-low index has broken down. It's now below zero. Of course, it did that on Thursday, and then Friday a little bit lower. And we are at the reading of the lowest reading that was at the end of January, okay, minus 92. But not to the extremes, again, of back in here December and August and June of last year in terms of the high-low. So we have got lots of room to go a lot further on that indicator. Let's see. All right, I think that's the indicators. Now we'll look at the 3 ETFs, and they're going to be done with this video today. I know we were taking a lot, but the market's been doing a lot of action here. All right, I'm looking for the semiconductors. We'll start off with the semiconductors. This has basically come right down to the 55-day moving average, and it's just sitting right there, okay, last 2 days. And doesn't look like an extreme sell-off, still looks like it's in a nice solid uptrend. Indicators gotten a little negative in here, okay, a little negative in terms of divergence, and then it's, of course, it's pulled back, but nothing to any great degree. Let me see. I don't think the weekly is showing us a whole lot. No, there's no divergence on the weekly. So the semiconductors are basically just tracking and not giving us any kind of signal, starting to break down a little bit on the daily, but nothing heavy. And that kind of is in sync with, I guess, the way the Nasdaq hasn't broken down severely yet. The home builders, on the other hand, is a totally different story. Okay, here's the divergences that came in on the home builders. And then remember this rising wedge on the home builders? And then now we've broken below the wedge, okay? And I always said, well, you know, typically you break out of a rising wedge like this whenever it's a valid rising wedge. And, you know, you typically will move quickly and go to the beginning at the bottom of the wedge. Well, it did that and has gone a little bit further. So it's really, the home builders are starting to say, you know, that market's not so solid, and maybe that's a verdict on the economy too. Let's look at on the weekly basis. It almost looks like it's kind of rolling over, and you know, when you step back a little bit, it just has that look and feel, but it's not nearly to the degree in terms of leading us down yet. Think about back here. I mean, when you look at back over here in 2006, 2007, right in here, let's see, where's October? Right here. Okay, right here was where the stock market went to its high, and that was it. Okay, that was the October 2007. Well, you can see how the home builders had already been in a downtrend. We're not really getting that yet, although it could be starting because we've broken to a new low here, the lower high, and now we're getting the lower low. So it's starting to break down. And let's see, the last but not least is the financial, select sector financial, XLF. Okay, so this is breaking down out of the congestion also, okay? And it has broken this trend line that's been in place for a year, over a year, and it's broken that trend line as of Friday, so that's fairly negative. And we've had divergence in here, but this thing just refused. It just kept going, kept chopping sideways, and then finally we got a break. Now, the other thing that's really interesting on this, on the weekly view, is look at this. Okay, so this trend is from 2011, so almost 3 years. That trend line got broken where we broke through that in the January sell-off, right down through here. And then we've basically done this chop sideways, and it's been a part of this kind of consolidation mode in here. But this trend line had been broken, so the damage was done and it was going sideways. Meanwhile, you're seeing all this negative to bearish divergence that's occurring. that says, okay, this isn't happening on a good note. And the other thing, I'm glad I marked this, I would have forgotten. Look at the volume. Okay, let me raise this. Well, I can't do that. Look at the volume. And what I've done is I've looked at the dotted line is the 50-day simple moving average of the volume. Okay, so I like to try to average it and see what kind. So if I put the trend line right at the 50-day here, and I put the trend line right at the dotted line here, you can see the slope of what's happening on a 50-day moving average of the volume. This whole rise is occurring on a decreasing volume. That is not good. That is not strong. Okay, and so when you look at this, this puts it in a little different perspective. This is from 2009, and you can see where this whole thing came from. Okay, so this is not a strong bullish scenario that's occurring in here, in my opinion. And this almost looks like just a corrective. And what you could see is, okay, what happens when, and I don't think it's broken it yet, but when it breaks this trend line from there. Okay. Anyway, all right, I think that is it for today. That's enough for 21 minutes. Wow. Apologize for going a little too long here, but anyway, I hope you found that valuable. Hope that helps, and I'll be back tomorrow with trade ideas. Again, you know, a lot of activity now in the Dow here in the market, so I thought I'd spend a little time on it. If you found this video valuable, please share it with your friends. Share it on social media. And, you know, don't hesitate to comment below. I mean, we were starting to get some engagement, people commenting, and I think that's great. And, you know, people can comment on people's comments too. So, if you're not a subscriber, please subscribe. All you got to do is hit the little red button here, or on the website, fill in one of the forms, just first name and email, and you're good to go. All right, we will see you on the next video.